Welcome back to the Beyond Wealth Advisors Economic Update. I'm John Cleaver, CEO and Private Wealth Advisor. And with me today is Kelley Manning, also Financial Advisor. Welcome, Kelley.
Thank you, John.
You are welcome.
And welcome, everyone. Thank you for joining us for our monthly economic update. Today, we're diving into something that hasn't happened very often. A government shutdown that has put a pause on the release of a lot of economic data we have to rely on.
Yeah, it makes doing these videos a little bit more difficult for sure, not just running the country. So since October 1st, much of the federal government has been partially shut down. I think we're all aware of that. And that means agencies like the Bureau of the Labor Statistics and the Census Bureau, really the organizations that collect and publish most of the country's economic reports, are on hold. So what does that mean? That means no new jobs report, no inflation readings, no trade data, at least not for now.
Now, that's created an unusual challenge.
Yeah.
The economy is still moving. Jobs are being created or lost. Prices are changing. Consumers are spending. But the official scorekeepers have stepped off the field.
I heard this morning it's like having Christmas without Santa Claus. I don't know. So it comes at a pretty sensitive, moment in time too. The labor market's been slowing down. Inflation's been coming down, and the Fed's trying to figure out, whether to keep rates where they're at or, do we cut again? So being data blind right now makes it harder for policymakers, business owners, investors, to really understand the road ahead.
Yes. You could almost compare it to driving at night without any of your headlights.
That's another great analogy.
Yes. You're still moving, but you have to rely on your other senses and some alternative tools just to stay on course.
Yeah, that is a great analogy. And honestly, that's what's happening right now is a lot of the information we're getting is coming from other places. And there's plenty of ways to gauge what's actually going on, even when the official data is not being published. So let's talk about that a little bit today. So how can we still read the economy even when Washington's gone quiet?
Great question. So let's start with what's actually missing. The big ones are the job report, the CPI inflation report, and retail sales. Right. Those are normally the backbone of economic analysis.
Yeah, those are the big ones for sure. And if we dive into this market conversation every month, but the good news is not everything stops. Data from other groups, some private groups, probably groups we haven't heard of like ISM, ADP, the Conference Board, those reports keep coming. And the Federal Reserve keeps publishing their regional surveys as well. So that oftentimes gives us more accurate data because it's coming quicker.
Yes, and those reports, along with some creative real-time indicators, give us enough to paint a picture, even if that picture isn't perfect.
Yeah, it's interesting. It's like they're filling in the gaps with more relevant data from other sources. So let's start with jobs, because that's where most of the eyes are on right now.
Correct.
So before the shutdown, the labor market had clearly lost some momentum. Job growth has slowed to about 30,000 jobs a month on a 3-month average, and that's significantly down from what we saw in 2023. At the same time, unemployment's edged up, 4.3%. That's actually a 4-year high.
Well, and that sounds concerning, but it's also not unusual after a long economic expansion. Think of it as a cool-off period rather than a downturn. Companies aren't laying off workers in big numbers. They're just slowing their hiring.
That's exactly right, Kelley. And we call that a low hire, low fire environment. So people are holding on to their jobs, but the new openings are more limited. And that's what we're seeing in the private surveys too. The ISM and other small business reports both say that hiring plans are subdued. And the ADP report even showed a small job loss if we look back at September.
Yes, so it's not a collapse. It's just a softer labor market. And honestly, that might be what the Fed needs to see because it helps relieve wage pressure and it keeps inflation from reigniting.
That is exactly right. Now, speaking of inflation, that's another big topic, and we've certainly had to get creative. But that CPI report that everybody relies on has been delayed. But economists are leaning on alternative sources. And one of my favorites is something called Trueflation, which uses millions of real-time price data across the economy. And it's currently showing inflation around 2.2%, which is basically in line with the Fed's mandate of 2%.
Yes, and that is so encouraging. And even though prices for certain things like energy or groceries might still feel sticky, the overall trend seems to be continuing in the right direction.
Yeah, it's difficult though, because we know real people are feeling the real sting of that. So it's hard to say that without, having some empathy there. So we also know the surveys are confirming that companies are reporting lower price pressures. So while we don't have that official number this month, most signs suggest that inflation is starting and continuing to cool.
Yes, and that's a good reminder that we shouldn't let one missing data point or even one headline throw off our perspective. The broader direction still looks constructive.
Yeah, and so let's shift a little bit, because what's allowing for that? It's the consumer. The consumer is basically 2/3 of the economy, and the economy depends on that household spending.
Yes, and here's where some of the most interesting alternative data comes in. For example, TSA screenings, the number of people going through airport checkpoints, it tells us a lot about discretionary spending. If people are traveling, that means that they feel confident in their finances.
Assuming they can get screened right now, right?
Correct.
That's another issue for another day. So those numbers have stayed solid this fall, and we're also looking at like restaurant reservations, and those types of data points are a real-time gauge as to how the consumer is actually feeling. And when people are dining out, that's a sign that they're not pulling back dramatically.
It's funny. These sound like small things, but they actually capture the heartbeat of the economy better than you'd think. Together, they suggest that while people may be spending a little more carefully, they're still spending.
Yeah, and that is really what's key, is the consumer just continues to show up and spend. So when you combine that with the solid wage growth, lower inflation, and a consumer base that's resilient, maybe not booming, but resilient and steady, that's when you get opportunity for continued growth.
Well, and another piece that we're watching closely is trade and shipping. Even though we don't have the government trade balance report, private data fills in the blanks.
Yeah, I mean, in spite of tariffs, right, that's another big headline right now. We're not going to dive into that today. But things like inbound container traffic at major ports, freight shipments indexes, they track millions and millions of packages being shipped and invoices being sent all over the U.S. And although those numbers have softened some, it's not slowed enough that it really concerns us too much going into the holidays.
Well, and after the huge rebound we saw after post-COVID, a little cooling isn't a bad thing.
Right.
It helps normalize supply chains and keep prices in check.
Yeah, and back to that inflation point, potentially help keep inflation from spiking again. So it looks more like moderation than a downturn. At least that's my thought. What do you think?
Beyond all the data and the charts, one of the best sources of insight right now comes from corporate earnings calls.
Yeah, we're definitely in the middle of earnings season, and when CEOs talk about their business, their hiring plans, the demand that consumers have, that's about as real time as it gets. And you often hear shifts in tone before the official data really ever catches up. And earnings season's actually been pretty positive.
Yes, we're heading into third quarter earnings seasons. Banks, transportation firms, and consumer companies, they will set the tone. Early previews suggest that most companies are still profitable, but just a little cautious.
Yeah, absolutely. Those early results have been good, and we think that trend will continue. So the big question is, well, what does that mean for you, the investor? Well, I mean, first of all, even without the official data, we can still read the economy. The signals from jobs to inflation to consumer spending, they all point to maybe a softening, but not a slide and certainly not a recession.
Well, and second, the Fed is aware of all of this too. If the data blackout continues, they'll rely more heavily on private and survey data. But the general view is that the rate cuts may continue into early 2026 if growth slows further.
That's a pretty big if, but yes, that's definitely on the horizon. So finally, it's a good reminder for any investor, but certainly long-term investors, that uncertainty is part of the process. This isn't something new. And whether we're missing data or there's political noise, it doesn't change the fundamental values of staying diversified and focusing on your long-term investment plan.
Exactly. The economy is like a big ship. It doesn't turn overnight. And while the headlines can make us feel like things are spinning out of control, the underlying current is still stable. And, you know, as we enter the season of gratitude and Thanksgiving, we're reminded how many people are affected by the government shutdown, men and women who are going without pay. So while our leaders hopefully can come to find a solution soon, let's do what we can in the meantime. So be a little generous with your neighbors, give a little extra in your tithes, and lend a hand at your local shelter or food pantry. Those small acts of kindness can make such a big difference right now.
Wow. So well said, Kelley. Thank you for sharing that. And so as we wait on the official reports to come back online, we'll keep tracking the signals that matter and sharing what we're seeing with you. And as always, thanks for tuning in to this month's Beyond Wealth Advisors Economic Update. As we near the close of 2025, be sure and reach out to your advisor with any questions. As always, stay informed, stay patient, and stay focused on what matters most to you and your family.